And we're finally into the first segment of the show. It's Prices, Profits and Plunges. And this is the segment where we discuss the biggest talking points of the week, from the World Economic Forum, which was just concluded in Kigali, Rwanda, to the Job Fund in South Africa. We remember the big announcement around the joint private-public partnership. And of course, that was a huge talking point this week. But as I said earlier, I think it was the John Myburgh report that really got the industry rather speaking, and that's the financial services industry, as well as all people that are interested in corporate governance.
Well, certainly a big story. We also had news on the company front with Telkom and the costs of retrenchments running into the billions, and the market shunning AngloGold Ashanti on Monday after the company narrowed its losses. And to bring context and analysis to all of these talking points, Gary Booysen is director at Randswiss, and Grathel Motau is executive director of Mmoni Advisory Services. Good evening to you both. And I think, Grathel, it's the first time you've come on the show, and I think I saw you nodding when I was talking about the African bank, Leon Kirkenes, up the corner of my eye. So perhaps start with that, and we can get on to other issues in a moment.
I mean, I think, the Mr. Myburgh actually called the former CEO hubris. And I mean, so that really tells you the sort of the arrogance of the man. But you know, one has to take this in context, remembering the fact that African Bank has managed to weather the storm for many years. So they've actually been considered as a leader in micro-lending and then unsecured lending over a period of time. So, you know, I guess then maybe the arrogance is, you know, was not really misplaced. And you know, unfortunately, in a case like that, where you have a CEO as strong, as larger than life, you know, it becomes a challenge for the board.
That's really interesting, the way your take on it. And Gary, I'd be keen to hear what you say, because I think Grathel is rightfully so touching on the personality issues, but certainly there must just be some business model lessons that have to be taken away from this, Gary.
No, of course. And I mean, yeah, it was interesting to see, you know, all the ways that, I mean, obviously the hubris was one, but, you know, larger than life, you know, maybe too nice to everyone, but then also a very dominant personality. So very, very interesting insight into the CEOs.
It's also the founder syndrome. So he starts the business, very charismatic, and as you say, very successful in difficult times for a long time. So people start saying, well, he must know what he's doing, we've got to trust him. But the governance thing comes in, where they say, actually, in the end, Myburgh says the chief risk officer was a botanist who was appointed to the position not to manage risk, but to manage stakeholders. And he says had a severe drinking problem. And Myburgh, it's a sharp report, this, he says, when he was capable of thinking, he wasn't qualified to do the job, or he was drunk. And then saying that the other directors really didn't ask questions as they went along. Yeah,
and I mean, I think perhaps just to add, and I think, you know, in terms of the directors, in terms of their responsibilities, in terms of the Companies Act, and, you know, he actually says that they acted recklessly, the directors.
In particular, the Ellerines purchase.
Yes,
they
exactly.
lent all this money to a company that was failing.
Exactly, knowing that the chances of recovering that 1.4 billion is really unlikely. And also just in terms of the chief risk officer, a position of that magnitude in an organization, the board is involved. And again, you know, he probably was able to muscle his views around the boardroom to say, you know, this is the man that I want. I mean, they say also that the report says there was no due diligence on the acquisition of Ellerines, and in actual fact, the board never approved the transaction. You know, how do you actually get away with something? You know, this is such a big acquisition as a CEO.
But the big focus now, Gary, must be on this good bank and how this is going to be should be fundamentally different in terms of the controls and balances to ensure that corporate governance is transparent and the like. I mean, what would you be looking for?
Yeah, I think it's not the model that was wrong. It was the individual directors not doing what they should have done.
But that's exactly right. It wasn't necessarily the business model. But I mean, as a chief risk officer, they were saying that, he couldn't even be qualified as a chief risk officer at all, because they were calling loans that had no payment for 3 months, non-performing loans. And I mean, this was outside of industry standards anyway. So, I mean, obviously the good bank at the moment, very much trying to distance itself from this whole situation and trying not to get tarred and feathered with it. But the fact is, I mean, those are the good assets that came out. And I mean, we hope that we see a relisting and an investable asset that people can get access to the unsecured and the credit lending industry again.
Well, let's go to telcos, because I think it's also been a very interesting week for both Vodacom and Telkom. Vodacom, Gary, because of that decision to give up on M-Pesa in the South African market. And I've always maintained that M-Pesa has taken off in Kenya because of the regulatory environment or lack thereof that has allowed it. What do you think has gone wrong here? And do you think this is a good decision just to say, guys, let's just let this go?
I think you've got to question the decision of going into M-Pesa in South Africa anyway, because remember, M-Pesa's worked well in other African countries because they don't have a financial system as strong as the South African banking system. I mean, we've got the likes of Capitec going and, providing product to the formerly unbanked, population. So M-Pesa, it didn't look like a winner right from the beginning. But I mean, if you're talking the telco sector in general, I mean, Vodacom still is now Africa's most valuable company. I mean, this week it actually overtook MTN. With its 61 million customers versus the almost 230 million at MTN. So yeah, for me, I don't know. Looking at the M-Pesa thing, I think it was probably a bad decision by Vodacom. Looking at the Vodacom share price, I think it's looking very, very fully valued.
Well, I suppose also in Kenya, Grathel, I mean, it's interesting to see. I always think of the taxi industry in South Africa. It happened before anyone thought of regulating it. So of course it's out of control. It happened so quickly. And these gadget type industries, it happens so quickly. Kenya, M-Pesa came before all the things we've got in South Africa in banking now. So it's like we were far ahead in some ways. Kenya, M-Pesa dominated. There's no space for M-Pesa here, is there?
Yeah. I mean, I suppose, we are an African country, but in some ways, we're very different in terms of our level of development. And as a result, we've moved that far compared to some of our fellow countries. And as a result, some of these systems and innovations are not going to work because we more like, although we've got a first and second economy, but I mean we've really progressed.
But Grathel, why does e-wallet work in South Africa? It's just more or less the same model. Why has e-wallet taken off so well?
Because it got here first.
E-wallet got here first before M-Pesa?
Yeah.
Are you sure?
Yeah.
Did it?
I don't think so.
Well, it certainly made. I haven't heard of M-Pesa in South Africa.
So here's anybody who wants to do a PhD. Here's a topic or dissertation topic: e-wallet versus M-Pesa. Why did e-wallet work in the South African market? If I can get an answer to that, then I will take any analysis about why M-Pesa is not working. But so the other issue that I wanted to raise about the telcos was Telkom, because they were paying out all these severance packages, and that began to eat into the earnings. But Gary, when you get a statement that says potentially 50% of the earnings are going to be eroded because of the severance packages, I'm just like, the cost of this turnaround is just a bit too much to bear.
Yeah, but at the same time, you've got to look at, I mean, markets are always going to be forward-looking as well. And I mean, yes, it is an enormous cost, but what is the alternative? To sit with unproductive labour force that is too big, that in a business that needs to be right-sized. And for me, you cut quickly, you cut deep, and you get the business efficient. That's the way to do it. To sit and struggle with an unproductive.
So take the pain, bite the bullet.
Take the pain now, get where you need to go, and then take it from there.
Yeah, you were talking about jobs and unemployment. Now, earlier in the week, we had Adrian Gore in the studio, and who were our other two guests?
Sandile Zungu, as well as Ellen Mokoku, who's the CEO of the Chamber of Commerce. So we asked Adrian Gore to please explain to us, why do we have this job fund? This is this big collaboration between private sector and the public sector, and what makes it different from everything else that the DTI is doing and the Small Business Ministry is doing. And this is what he had to say.
Maybe important to say this is a business-led fund, which I think makes it quite unique. So the investment in the fund is by business collectively. We are hoping, and I think government will match us in that investment, and that those funds will be co-invested with fund managers into small businesses.
Okay, so we're going to ask Gary and Grathel what they think about that, but we also then spoke to Sandile Zungu, who's the Vice President of the Black Business Council, and we asked him whether black business was happy about this particular fund, and this is what he had to say.
But we expressed a misgiving that there's so much that unlisted companies have to offer, as well as established black business who are willing to come to the party, who still have to be approached. And there's a commitment to reach out to them, because when South African history is written, black business must be counted as having come to the party. So we are waiting with bated breath.
Well, another thing we talked about there, I get the sense with these jobs issues, it's often not about the money that's available, it's about the policy environment into which you're pouring the money. And, you know, they say madness is doing the same thing again and again and expecting a different outcome if you do the same things. And we asked them, but obviously they're all trying to be positive about this money that's coming in. Is it another fund that's not going to make a difference?
I mean, we've got funds everywhere. We've got the IDC, we've got the DBSA, we've got now the Black Industrialist Program. And really, the challenges of South Africa is not money. It's about making that money accessible, but also making sure that it goes to it attracts the right investments. And therefore, you know, we can announce more and more funds, and funds will just sit. You know, and until such time as we actually take the fund and channel it into the correct productive areas, then, you know, then we're just wasting our time. That's my view.
So, Gary, they say that the private sector's sunk 1.5 billion in this. They're waiting for government to match it with another 1.5 billion, and they have a target of reaching 10 billion. Are these numbers exciting for you? And especially, they say that it's going to be a venture capital model. I mean, do you think this is going to move the dial?
Personally, I don't. I think, you know, looking at it, I mean, yes, it is significant numbers that you're looking at, and, you know, small business does account for the majority of jobs, but again, accessibility to capital is an issue in small businesses. But what is, for me, I take David's points, what's far more important in the South African context, I think, is policy. Go and look at the IMF's Global Competitiveness Report. The number one issue in South Africa is over-stringent labor regulation. If you loosened up labor policy and allowed people to hire more, you would have, you know, the skills and the training that they would access, even if someone only came into a business for 3 months, would make a world of difference, far more than a 10 billion rand fund, I believe.
And of course, when we start thinking a little bit more about this, it was interesting that Adrian Gore said this is a private sector-led initiative, and one would have expected Minister Lindiwe Zulu to perhaps, Grathel, be on that panel as well, to show that we are coming with the right mindset into this conversation of making sure that the policies are right. And so again, it's disconcerting that there's government pulling this way to create jobs, and it seems in this case private sector also deciding that they're going to start their own initiative. Well,
I mean, I guess there's some politics involved, but for me what is positive about this initiative, you know, let alone whether it's going to work or not, I think the fact that there's a now collaboration. There's a movement towards collaboration between private and the public sector. For me, that is a positive sign.
Also, my impression was that the minister asked them to do this, so they could hardly say no. And I'm interested to know, which they didn't tell us, exactly where the money comes from.
But also it was which minister, which is what actually counts, because I think they said the Minister of Finance, and then you begin to ask yourself, where's the Minister of Trade and Industry, where's the Minister of Small Business, and whether maybe we just have too many ministries to start off with.
But what I want to get back to was our news item at the beginning, the silicosis thing. Now, this is a social issue, it's a health issue, it's an apartheid issue. You know, lives were cheap in the old days. And now this is, let's just talk investment here. You must have been interested to think about the gold mining companies and companies like Anglo American, which owns no gold mines now, but could be liable for compensation on the silicosis thing. So gold investors, a risk.
But I think it's always interesting when you look at these sort of court cases that stretch back over many years. I mean, you look at the construction industry, for example, and the Competition Commission fines that were levied. You have to look at the shareholder register and actually see who you're punishing here, because quite often the shareholders in the businesses have changed fairly dramatically, and you might be punishing current shareholders when they actually had nothing to do with the gold companies of the past.
It's like the pollution of the water by the mines. Some of these mines don't exist anymore.
But I think I'm going to be a bit cheeky and extend this and say it's like young white South Africans saying that they have nothing to do with apartheid. We have to actually take cognizance of the fact that present day conditions are a continuation of the past, and so companies now might have to look at compensating workers back then.
What do you think, Grathel?
Yeah. Well, I mean, I think it will definitely present challenges for the mining industry. I mean, in accounting terms, one would then have to go back and start assessing the going concern of some of these organizations, because the amounts goes into billions. And I think, going forward, then it's about, how do we, as you say, how do we actually fix things now to make sure that we do things right?
Exactly.
How do we make sure that companies don't only look at profit making now going forward, to make sure that the environment is also taken into account. But I think we have to take the hard pains now in order for us to move forward.
Absolutely. It sounds like the South African social narrative, we have to take the pain now to rectify what was done then, so that we can move forward. A very big thank you to Gary Booysen, he's a director at Randswiss, and of course Grathel Motau, first time on business this week. She's been fantastic. She's an executive director at Mmoni Advisory Services.